It is time to take a look at the week ahead in finance, and joining us, our late news money expert, Scott Phillips from Motley. Scott, good evening. It'll be a busy week in the United States. Key manufacturing and inflation data will be out, while all eyes and ears will of course be on Washington because the chair of the US Federal Reserve is set to be in the spotlight.
Yeah, Peter, good evening. That's a really good rundown, and that's exactly where the focus is going to be. Some weeks it's all about local data, some weeks it's about our market. This is going to be a very international week for the ASX. As you rightly say, manufacturing numbers telling us how well the US economy is going. We expect that to be pretty good. The key is inflation here, because the US Fed has already flagged that they'll start reducing the stimulus and possibly put rates up as early as next year. And that inflation read will tell us for sure which way they're planning to head. So all eyes on interest rates and the markets as a result. OK, there'll be a rare meeting with the G4 central bank governors this week. They're set to discuss the future of monetary policy beyond the pandemic. And again, Australia has a keen ear on this as well. Yeah, I'd love to be a fly on the wall on this one, Pete, because this is potential. It's not going to impact the markets this week, but it may well impact markets over the next 2, 5 and even 10 years. We've had such a torrid time through the pandemic, rates down low around the world, government deficits up high again. It almost feels like exiting the GFC all over again. And so the direction of monetary policy and the actions that those central bank governors choose to take really will determine, I think, the shape of the economy, how quickly we get out of these recessionary times, how quickly government debts get paid down, and what happens to interest rates moving forward. I don't think we'll have a lot of big announcements, but it really will determine, I think, the way they think about things like inflation targeting, for example, whether 2 to 3%, like here at home, is too much, whether they should be chasing it again or whether they're going to recalibrate those targets. So really consequential meeting, even if the results won't be felt for a couple of months. Back home, retail sales and, critically, I think, home loan data, they'll be in the spotlight for us. Yeah, this is going to be huge. We're expecting slight negatives on both of those data sets, but the size of the negative really matters. Of course, retail sales is the August month. We know what happened during August and, of course, in the current month of September. So we're expecting negative numbers there, but the size of the fall really will tell us, I think, how the economy is faring. That's super important. Home loans, of course, as well. We've seen house prices really continuing to race ahead during the pandemic, during the lockdown periods. Again, a slight negative expected on the numbers there, but if they do end up turning positive, really will give the RBA more to think about, I think, in terms of interest rates, and the government potentially something to think about what they need to do on house price growth. And before we say goodnight, Scott, what can we expect this week when our market opens? With all the news we've had so far, Pete, this is the most underwhelming. The Australian futures, I should say, show a gain of only 2 solitary percentage points. 2 solitary points, I should say, sorry. 2 solitary points. So it's going to be a really flat start to the market, as long as, fingers crossed, nothing breaks in the US overnight. OK, Scott Phillips, Chief Investment Officer from Motley. As always, thanks for joining us on the Late News. Thanks, Peter.